boy! Base! How low can you go? Death row! Want a brother know once again back is the incredible rhyme animal, the incredible. That doesn't fit. Oh, clean up your office! Yeah. Clean up your office. Hang on, I got lots going on. Where are you, Bubba? Bubba. Can I tell him that I never really had a gun, but just a wax of the Terminator X spun? No, they got me into the cell because my records they sell because a brother like me said, well. All right, so, hey, what's going on? Where are we? Hey, I guess it's Monday. It's so funny, like, I never know what day of the week it is. I don't stop, especially with COVID, I don't stop for anything, so I'm like, what day is it? Oh, yeah, normal people go to work today, so it must be a Monday. So anyways, hey, yo, you know this, but I know you did. So it's a Monday. Regular people get out of bed and go to work. So, yeah, okay, cool. Market's been open more than 12 hours now. So you should already be well on your way for November. So anyways, today we'll go through the Forex.Today calendar. And, well, if you've already attended Off the Charts with Wayne McDonald, you've already gone through the calendar, so I'll keep it short and sweet. All that kind of stuff. And what else? We'll do some technical analysis. I'll answer your questions. We'll feel good. We'll smile at each other. And then, hey, we actually got a busy week. So I know you know tomorrow's the election, but there's a lot of other stuff going on. And we'll cover all that next. So if you're into things, foreign exchange, things like technical analysis, macroeconomics, political, event-driven strategies, we'll cover those today. So smile ear to ear. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, hey, so we got a lot to do today. The calendar, some technical analysis. We could look at some monthlies, weeklies, dailies, answer your questions. In particular, you probably have questions about the election and all that kind of stuff. And then we'll get on with our beautiful week. So very cool. Thank you for being here. Thank you for being part of the Forex.Today community of more than 16,000 people. That's pretty cool. When you think about it, that's almost like a small rock concert. So wouldn't it be cool if we could get together all at the same time somewhere, all 16,000 of us? There shouldn't be solid things in my coffee. What is that? No. I just made like a $9 coffee, and I think the milk is spoiled. Can I still drink it? Maybe I'll just skim the scum off the top. Oh no. Well, nine Nespresso pods down the drain. So anyways. So thank you for being here. And of course, thank you to Traders Way for being a part of our community as well. You're a trader, they're a broker. They want to earn your loyalty and respect, and so they're asking for that. That's it. Give them an opportunity to earn your loyalty and respect. So you do that by visiting tradersway.com. Try a demo. Download MT4 or MT5, whatever you want. You can have a fixed spread account, variable spread account. You can have an ECN account. And by the way, ECN accounts right now have half-price commissions. Tradersway.com. Thank you, Tradersway.com. Oh, right. Right, Dan, right. All right, so here's where we kind of left off last week. Boy, I really want that coffee. Really? Do you think if I drank moldy coffee, not the coffee, the just spoiled milk in my coffee, would that be bad? I really want that coffee. I'm thinking about it like, how bad could rotten milk be? I mean, it's good coffee. I probably should say no. So anyways, this is where we left off. We're still on support. Okay? But, and that's a big but, we're supposed to be planning November. How many people did their November trade last night? Right on, Sky Killer. Oh, it's lumpy, Jim. Okay, there's a lag here today, huh? There's a big lag. How come I keep putting it on ultra low latency and then there's lag? What internet am I connected to? Business? Okay. Maybe I need to reboot my router? Let's try this. Why is there such a lag? New window. What do we want? Google speed test. It ain't bad. I mean, considering I'm wireless, it's not bad. So you guys should be fine. I don't know why there's a lag, YouTube. Anyways, so you got a couple? Yeah, I understand why you're waiting. Sky Killer says 2 trades, but you know, ultimately, in a normal week, you got to be making more than 2 trades. Right, especially for swings. Otherwise, you're like, you know, you got a lot based on 2 shots, right? It's sort of like if you only took 2 shots, then you have to basically score both. You have to have 100% accuracy to make any money. So you got to get some more trades on. But anyways, if we switch some of these out, which I think we should probably do. Okay, it's not a pretty chart, but some of these you're going to find we're ready to go. Now, Kiwi is interesting because their central bank is set. Thanks, Shug. Their central bank are set to go negative, so there's not a lot of reason to buy it. But can anyone think of a reason why New Zealand could possibly get a rally? Hint, hint, hint. We talked about it with an off the charts with Wayne McDonald. I think I have a link somewhere to that. Recording. Oh, I got too many windows open. Too many windows open. Well, I do somewhere, but yeah, cheese prices are way up. I know, right? Oh, I want that coffee. So anyways, but that, I'd say the central bank. The central bank probably has more influence on the value of the currency than cheese, but that is the right answer. Parmigiano Reggiano. Yeah. All right, so what about other things in the world? We take a look at Aussie. Okay, so imagine you're a bull. I'm just picking a bull. You can be a bear and you should already know what to do. But anyways, if you're a bull, what are you looking for? You're looking for stability at support, right, in a downtrend. You're not necessarily looking to buy lows in a downtrend, because remember, you actually buy higher lows, not lower lows. But the first step of a reversal is going to be stability at obvious support, right? So that's what you're looking for, and you can see we've had some stability for a while, kind of like we had here. So once again, it doesn't mean up, because you can see we moved sideways for a long time. What's actually happening on a higher time frame is it's waiting for the EMAs to catch up, and then you catch like a 4-hour 21 or something right here, and then pushes it down to the next level. So this doesn't mean up, but the first part of a potential up would be, right, you got to have the stability. You got to have the support first. Then you might get a double bottom, and then you might get a higher high, and then you got to fight all of this. But it all has to start with support. Okay. So you ask yourself, is there any support here? Well, I don't know if it'll let me do this. Let's try this. Custom biased pivots, bullish, monthly. I don't know if it'll let me do it. Oh yeah, it did. Cool. What do you notice? Well, if you're a swing trader and you're swinging the month of November, this is the exact price you wanted at the market open. 73.27. Huh! Whale oil B, MR fish. Isn't that interesting? Now, this is a step down, right? But still, isn't it interesting that you got your exact price on the first couple of hours of the entire month? You may have a trade on, and you may be done for the entire month of November. Now think about this. Now we have massive event risk coming up, so you might get in a situation where you make nothing. But you could be in a situation where you make a ton. Well, that's a pretty good shot. Okay? Anybody catch this one? Just a basic boring position trade, which is a form of swing trading. Anyone catch that one? Let's take a look and see what else is going on in our world. That's Aussie. How about Euro? Ooh, what? Just double checking. There's the monthly. Okay. So on the first hour of November, trading, we opened at exactly 121.67. That's interesting, huh? Remember, when you're a swing trader, you know the exact price and the exact time. Okay, now this is super ridiculously, unbelievably aggressive, but your first part of the trade, remember, you're not necessarily interested if you're right. You're interested in if you have a trade and you can manage the trade. So you know that you should, if you're using price action and moving average theory, if you're going to lose, it's going to look like that. So you have this here. So if you take the shot in the first few hours, can you jam your stop before that happens? Yeah, probably. Now that's an aggressive trade, and you got to know what you're doing. But for show, it could be done. Okay, that's not an amateur trade. That's you got to really know your risk management here. But you can pay close attention, of course. So there's the lowest low, and then there's a new lowest low, and then there's the new lowest low, and there's the new lowest low, and there's the new lowest low. So it's not making lower lows. So I should be able to give you this chart and say, draw the stochastics. And right now you can see we have found support, and we are not making lower lows, but we are making higher highs. And then we're not making a higher high, and then we are making a higher high, and then we're not, and then we, okay? So you should understand that it has crossed up, but it's crossed up and is flat. Okay? And I wouldn't call that overbought yet. Not even close, in fact. So interesting. Okay. Now, of course, if this makes a lower low, then it will be overbought and roll over. I can feel that laughter, so why do I see it? So, if I'm a bear, I'm going to be hardcore on this. This is your roll reversal. This is your 21. Should be colored this way, right? This is your 21. So if you are a bear, get ready. Okay? If you're a bull, you have enough to say, interesting. First of all, if you're a bull, you're like, okay, that's no longer making lower lows. And this was a heck of a rally, but into the roll reversal. But notice no lower low. That's what the 21 is trying to predict. So now what you're thinking is 55, higher, high, higher, low. And you're like, oh, yeah, this is bullish. So bears, you had your turn. It comes down to whether bulls are going to give you a serious challenge today or not. Do they want to be in before the election or not? Right? So get ready. This ain't funny. Okay? So this could be interesting if you're a bull. Bears, like I said, you did what you were supposed to do. And now, as a bear, it's going to fall right now. Okay? See that it's not only a 21 EMA, it's also a kickoff, a roll reversal, and it's a week, it's an M3, a daily M3, I think. I'm trying to calculate it in my mind, but it's the pivot's right there, the M3 pivot. Okay? So if you're a bear, it's got to happen in New York, bro. Bro. Good deal, bro. What's up, Maida? Peccary says, hey, how big is it going to be tomorrow? Well, nobody knows. But I can tell you in the past, yes, the night of the election is important, but really the macroeconomics are more important. So I would say the potential, the overall potential of the move could be 5,000 pips. Okay? But not all tomorrow night. Okay? So I don't look at tomorrow being a binary bet, like tomorrow I'm going to get rich. That's not the right way of looking at it, of course. And that will lead to poverty. So the right way of looking at it is capital will be freed. Okay, capital has generally been frozen because people are waiting to see who will be in the White House and what policies. So, for example, I explained yesterday at Off the Charts with Wayne McDonald, I explained how a Biden win will rally the muni bond market for years. And why? Of course, behavioral finance was the idea. So like, interesting, right? So what's more interesting than the volatility tomorrow? Remember, volatility is bad. So yes, we'll have volatility tomorrow. Yeah, we could plausibly make a lot of money tomorrow, but that's irrelevant. It's childish, but sure. Yeah, we can have some candy tomorrow. But what's more interesting is the macroeconomics and the medium and longer term capital flows. So if Biden wins, it'll be an adjustment to capital flows, but capital will flow because now we know. We are certain who will be in the White House. If he doesn't win and Trump wins, then we already know who's in the White House and what kind of policies Trump would make and how to make money under a Trump. I mean, we already have the machines. The money machines are already tooled to make money under Trump. So we're like, okay, just keep going. Keep doing what we've been doing the last 4 years. So there's a consequence, and then, of course, different capital flows in different ways. Okay? So, again, like, what's the volatility going to be like tomorrow? Well, we'll be there. We'll watch it. We'll figure it out. But the bigger money is bigger than that. There's a bigger move. There's bigger reasons. There's a logical reason. We're talking Newtonian physics here, not, magic. So, yeah. Okay. Oh, we're a small group, Jeff. Okay. We do that Thursdays, Sky Killer. I'm going to have to move the time earlier, though. We've been meeting at 4 p.m. I'm going to need to move it, like maybe move it to noon. Because with schedules dramatically changed when kids were removed from school and then put back to school, and then they're part-time here and not part-time there. And it's pretty chaotic to have children right now. So that works a lot less ideally. So what I typically do as soon as that meeting is over, I'm not joking, I hit stop, I get up, I run upstairs, I run through the house, and jump in the vehicle, and I'm gone. And it hasn't even downloaded yet, and I'm already out of the house. I'm out of the house within 3 minutes of the webinar ending, and it's pretty chaotic. But I think we can move our to noon and be able to do just as fine. Was that right, Henley? 11 a.m.? So anyways. So, yeah, we'll move. So anyways, going back to tomorrow, and really just trading in general, never, ever, ever, ever get in the mindset of trying to make a lot of money quick. Don't ever look at like tomorrow that you're going to make a lot of money quick. One of the most interesting things about trading is nobody actually wants that, unless you're trading your own account. But even then, you get yourself into danger. Now, we can get some pretty crazy volatility that might be favorable. And we might throw down a bunch of little trades and jam stops and just pray. But it's a dangerous philosophy to begin with. It's a dangerous mindset. And we have to kill that beast at some point. Why is that, Gregory? Yeah, I don't even know what time Ryan does his meeting, so I don't want to overlap. All right, so let's get back to here. And then so kitty cat. Okay, we're stuck in the range. Remember, stuck in the range. Stuck in the range. Stuck in the range. Custom. Well, you know what I forgot to tell you? The programmer will be done the new installer for MetaTraders, and I'm going to give you guys the price action pivots. So if you are any customer at MetaTraders, if you're a client at all, even if you only bought the $5 thing, we are building the new installer right now, and there's no additional fee or nothing. You just log in, run the new installer, and you have it. Compliments of the firm. So hopefully he will be done tomorrow. And if you don't know what I'm talking about, indicators, custom, price action, pivot points. Aha. Okay. So they look like that. They're actual pivot points. So I gave them to Ryan last week, And he's like, they're amazing. They're amazing. And he's like, I want to play with them. I want to look at them. And he looks at them and he's like, wait, this isn't a channel. It's pivot points. And I'm like, I know. That's why they're called price action pivot points. He's like, wait, that's amazing. But you don't trade it like a channel. No, of course you wouldn't trade it like a channel. It's not a channel. It's a pivot point. It's just sloped because it's using price action, not market forces. And he's like, it's brilliant. I'm like, I know. But it's great to see someone play with them and like, holy crap. Yeah, I know, right? So anyways, you can have them for free. And of course, if you look at them, so if I go back to indicators, yeah, they're mine. Okay. And again, I got to this because I was doing linear regression calculations for schoolwork at Harvard. And I'm like, oh, well, that's interesting because if you look at this and you look at that and you look at this and you look at that, that's a lot like pivot points. And so I went back and I looked at the math of pivot points and I'm like, oh, snap, I understand. Now it's not just like some genius made some calculations. Now I'm like, now that I studied the math behind linear regressions, oh my God, I understand what the math of the pivot points is doing. Yes, it is, Jeff. So I'm like, oh, so now I can create my own pivot points, but I won't use their math. I'll use my math because I'm interested in, so if pivot points tell you essentially overbought and oversold conditions of the market, okay, what happened last week, what happened last month, whatever. You're measuring a period of time. And what they're essentially telling you, if you look at like things like 1 standard deviation and 2 standard deviations from a mean, you're essentially saying, well, this is overbought and this is really, really overbought, or this is oversold and this is really, really oversold. So you're like, okay, so that's what pivot points are doing, is measuring market. But market is set. It's set. It's a period based on the last period. This new period will be this. But we know over periods, especially over months, let's say, over a month, things can change in the market. We can go from a bullish market to bearish market, and pivot points won't reflect that really. I mean, they kind of do, but they won't adjust, is what I'm saying. They won't adjust until you get the new ones. So I'm like, well, what if you don't measure the market at all, but you just measure price action? But I still want to know the mean, the slope of the mean, and I want to know, standard deviations of the mean and all that kind of stuff. And I'm like, oh, well, so I redid the math by hand. And there it is. Okay, so since August, this, right? Overbought, oversold. Green means buy, right? Red means sell. Green means buy. Okay. Now you put this in conjunction with your other tools, and you'll see it become very powerful. Okay. Oversold, 5A cross up. Overbought, 5A cross down, out. Okay, so anyways. Neat, right? So you can have those for free. Okay. Slaughter says, what modifications? Well, the math, it's sort of like the math is the same as pivot points, but it's measuring different data sets. So so it's just they're pivot points, but they're not pivot points. They're pivot points based on price action. That's how it's not looking at periods per se. Or maybe another way of looking at it is they're dynamic periods. So you're not looking at a period of time. For example, your periods are no longer market-based, but your periods are candles, right? Which is price action, right? It takes a little bit to do the math. See, it's actually calculated. There's a lot of calculations that go into it. Wait for it. Wait for it. Okay, it has to do a lot of calculations. So it's looking back for the last 144 candles and finding the mean of each candle relative to the other candles in the period, creating an average of the mean, and then calculating the change in the average of the mean to create a slope. And then from the slopes, it's then measuring the highest highs and higher lows to create 1 and 2 standard deviations of the mean. And then, of course, adjusting as we go through every single candle. So it adjusts in real time, where a standard pivot point measuring market doesn't ever adjust. It just gives you a new period when the old period is over. So it's the same math, but in a completely different way. And like I said, there's a little bit of a thought process. It takes, when you adjust it like that to say, okay, give me all of this over 144 candles. It's like, okay, wait, dude, I got to make 9,000 calculations here. Just hang on. But you can see how powerful it is. Okay. So now if you were a bull, you'd be waiting for reversals. Okay. And taking this north. And of course, your target would be here in the future. What do you think? This might be a tool you like. I'm giving it to you for free. And of course, if you're not a client right now, visit metatraders.com and pay the $5. You'll get this and a whole heck of a lot more. Yes, so tomorrow we are meeting at 7 p.m. in the war room. So we have 2 groups, depending on what track you're on the pro track or if you're on the swing track. Either way, you have access to the war room. Tomorrow, the war room will open at 7 p.m. And I don't know, we'll hang out for 3 or 4 hours. Okay. When will it be available, this tool? The programmer's wrapping it up. He said it should be ready tomorrow. So, nice. Yeah, a lot of people have been waiting for it, Stephen. So, please enjoy. I hope you find it useful. Okay, let's take a look at some dollar. Okay, here's my old tired trade. So we looked at this as a bullish exit, and we looked at this as a bearish monthly and weekly entry. And now we're down here. And the interesting thing is, the last week closed, I was up 204 pips. And then the market opened and I'm up 208 pips. And then I was up 212 pips. Then I was up 206 pips. And then I was up 203 pips. And literally the last 20 hours of trading, not including the weekend, nothing's happened. Yeah, Sky Killer, it's just in this live, I think it's the section, it's labeled something like Live Trading Group, and you click on it and it gives you access to the Zoom room. Okay, that's what that is. So that's that. The interesting thing is, even though I'm short, I am fundamentally a bull. Henry says take profit. Yeah. I'm sort of playing this as a built-in hedge for tomorrow. So, for example, Henry, if we get to like 9 or 10 o'clock Eastern time and we don't know. Like, it looks like we don't know. Like, we're not going to figure it out. We're not going to know tonight. More uncertainty, and we'll probably be down here and I'll be up in a total of 500 or 600 pips. And I win. Of course, if we start to know, I believe this will go up. And to me, it doesn't even matter who, so that'll be interesting. But I could be buying along here, in particular on other pairs. Meanwhile, I'm not giving up anything, right? This is all opportunity cost. So, tomorrow could look like this. Tomorrow could look like this. Tomorrow could, like, there's a lot going on, and I want to be up. I want to be long tomorrow, but I could be wrong. So it's nice going in. Essentially, I already have 200 pips to play with. Okay? Does that make sense? So if I sit around and it just doesn't work the way I thought, what's going to happen? I'm going to make another 300, 400, 500 pips. Cool. Nice. I'm like, that sucks. We still don't know. I make money. Now, if we start to know and there's a clear winner early on, like it's a landslide victory, oh yeah, I'm going to be up. I'm going to have the up. What about this thing? Whatever. I mean, I could take profit on the way up, but it's nice to always be hedged. Like, it's an insurance policy. So we're like, Biden's going to win, Biden's going to win, Biden's going to win, Biden's going to win, Biden's not going to win. We don't know. It's going to be a tie. It's going to be a tie. It's going to be a tie. We don't know. It's going to have to go to the Supreme Court. So, I no matter how certain we are, there's still some built-in uncertainty that, Hillary's going to win, Hillary's going to win, Hillary's going to win. Boom, Hillary didn't win. Okay? So, oops. So anyway, so that's how I look at it. Okay. Okay. But yeah, normally if this was a normal day, well, first of all, I'm a bear or bull anyway, so I would have got out on Friday. Okay. And this is the exact price that should squeeze a bear out. And I don't see it happening right now. That's all. It's supposed to, we should already be here today based on normal market conditions and technical analysis and all that kind of stuff. So clearly no one's ready to buy. And if anything, between now and tomorrow, there will be people that say, you know what? Take me out of the market. So I believe all of this move here is not bears. Okay? And off the chart with Wayne McDonald yesterday, somebody said, the bearish move. And then I'm like, well, okay, I know what you're saying. I know what you meant, and I know you meant down, but I have to still do it. I don't think this is bearish. I think the price fell. But that isn't necessarily a bearish move. That could simply be bulls getting out and not bears selling, right? So I think this is mostly people taking risk off before the big risk event. It's one of the major reasons why I sold it. So right now, does this look like the bulls are jumping on the best opportunity of the week and even of the month for November? See, if you're a position trader, you're buying at exactly the price we're at right now. And if you're a swing trader, okay, you would be buying at exactly the price right now. Both bullish position and bullish swing traders would be buying right now. It's the right price. There's a double bottom. Everything is perfect, except I'm actually looking at the candles here, and they're not doing it. So right now, there's no reason to get out, even though I want this to go up, and I can't will it up. And it's too early. I don't have the trigger, so I can't participate as a bull. Plus, there's the risk. So I think all the other bulls are thinking like me, like, oh, this is perfect. But I would have done it last week. I would have done it the week before. I'll do it 2 weeks from now, but not this week. Therefore, we're in that kind of market. Okay? So what could happen is, boom. Okay? But what doesn't look, it doesn't look like this at the moment. So if anything, fizzle, 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 fizzle up. Okay? In fact, it'd probably be more like this. Fizzle, 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 fizzle. Okay? And of course, if it's not like that, what'll happen? Fizzle, 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 fizzle. So I'm already in to win. I gotta move. I gotta move. Give me the juice. I can hear the music, except I don't know the words. Okay, so if we breach this, it's a long ways down. Would you agree? What else is holding this up? Okay, and then what? So all I know is it ain't bullish right now. That's all I know. These are pivot points, monthly pivot points. You want to see the template? And template. I think, what is this? So this would be pivot point monthly. So here's pivot point weekly. Oops. What am I? Oh, because I'm on a daily. Pivot point weekly. Pivot point monthly. Pivot point daily. Okay. I also use a confluence, pivot point confluence, which is weekly and monthly. So these big fat gray ones and black ones, the big fat ones, there's a gray zone up here and a gray zone down here. Those are monthly pivots. The smaller ones, the smaller, thinner lines are weekly pivots. And you can see the overlap, but that's very indicative of the first week of the first month, but nonetheless. Okay, so I'm trying to look at bigger time frames. So for example, like the way we swing trade is if you are a bear, see, they don't tell you to be a bull or a bear. Okay, indicators don't tell you anything. But if you know you're a bear, here's the cool thing about, let's take last month, for example. Okay, last month, the month of October. If you were a bear, there are two prices. This is an okay price right here. And this is the best price you're hoping to sell. That is the best expected price, the best selling pivot we got. So I sold it. And I made money. But that's what we do. That's a swing trade. All you had to do is be a bear. You might have tried here in the earlier in the month, okay, and it didn't work out, so get over it. Then you might have tried up in here inside your sell zone. It only worked out for a week and a half and then rallied back up. Well, whatever, you probably made money. If not, get over it. Then what? Well, now put this in the context of bulls and bears. This is exactly where a bull would buy. We know it. It's so basic. It's like ABCs. So you know a bull bought that, and we also know where the bulls are going to exit, right here. And you knew it days in advance. You're like, okay, bulls got control of it. Okay, whatever. It's their turn now. So they jam it up here. They hit on a Wednesday or Thursday, and you know they're getting out. So by Friday front run, Monday open, you sell there. Why? All the bulls exited. It's like we knew that here, that this would occur. Only if you're a bear, of course. But again, none of these tools tell you to be a bull or a bear. If you haven't made a decision, then that's what's holding you back. Oh, well, the MACD has... screw the MACD. Is this going up or going down? I don't know. There lies the inconsistency in your trading. So anyways, bears would sell that all day long. Very boring confluence right here. And now if you're a bull, well, you know the bears are supposed to exit here, and this is the exact price you should be buying. So we already know that. So that's why Henley comes in and like, exit the sell. And I'm like, yes, that Henley's 100% right. The only reason I'm overriding it is my intent was different. I was intending to use this as a hedge. Okay? Okay? But in a normal market, if you're a bull, it's tough because of the lower low, but you're still going to take a shot. Okay? So that's why I'm analyzing this area here now, not on a 1 hour, but a 4 hour. And if it was so gosh darn bullish, we should be up here by today. And then probably by Wednesday down here. And then by the end of the week, slightly higher. And then next week. And, I'm planning this out well in advance. So I know what to expect if this is turning bullish. We don't quite have that yet. And I understand why bears are... Again, this isn't bears, this is bulls exiting. So this definitely can continue. So I have no reason to get out. They're taking risk off before an event risk. Cool. So if I show up tomorrow ready to go long, but I'm short and I'm up 350 pips or something, then good for me. Now I can play with those pips. I could take the profit and go long as soon as it goes long, and now I can say, well, the next 350 pips are free. Right? I'm trading the bank's money. Or I wait to go long and I don't get it, and I don't get it, and I don't get it, and there's no conclusive results, and all of a sudden the media is like, oh my God, we're not going to go, or we're not going to know, and this is going to go to the Supreme Court. Will Trump relinquish his power, or will he roll out tanks? And you're like, oh my God, right? If Koki cries, right? So I'm in a position to do very well under that circumstance as well. So that's what I'm doing. Okay. Yeah, I have emailed that out to subscribers, so the password is there. Wayne, can you show how to put the chart templates on my charts? Already downloaded. There's an installer, Miguel. You run the installer and it does everything for you. And there's a video showing you how to do that, Miguel. Okay? Super easy. When you run the installer, and of course, there's a whole video telling you how to do it, but let me show you how easy it is. You run the installer and it says, hey, I'm going to install your MT4 tools. Cool. Next. This is where do you want to put them? And there's in the video, I show you, go to File, Open Data Folder, and you copy this URL. That's it. And you paste it into the installer, and then it says next, and it goes, like I hired a new programmer this time, and I'm like, yeah, so I need you to update the files and then run a new installer. And he's like, okay, I can do that. Then he's like, holy crap, there's more than 200 files in this thing. I'm like, I know. Okay. Yeah, imagine you used to have to install them all manually. No, this one goes in your, in your indicator folder. This one goes in your profile folder. This one goes into your EA folder. This goes into, right? And people are like, oh, I can't do it. So now you just run. So I paid someone hundreds and hundreds of dollars to build the installer. And now what you do is you're like, do you have MT4 or MT5? Oh, I have MT5. Okay, click this. Where's your folder located? So you grab that URL, pop it in there, and it installs hundreds of files for you. And you're like, oh, I'm done. Reboot MT4, or in this case, sorry, MT5. Ta-da! You're like, oh, there's all my files and my templates. So for example, all of a sudden, you'll have all of these. And then all of a sudden, you'll have all of these, So you have profiles, your templates, and then all that kind of stuff. So it's literally hundreds. He's more than 200 files. Okay. When you took a trade on this? No. My God, this is Monday of last week. Yeah. So I don't trade typically Monday. I trade typically Sunday. On Monday, I'm trading Tuesday, and on Tuesday, I'm trading Wednesday, and on Wednesday, I'm trading next week. By the time Thursday comes along, I'm already on next week. So typically a Thursday, I'm either preparing to front run Thursday or front run Friday or wait for the market open on Sunday. But it's funny, like, I don't think there is a Monday trade. Monday's trade, I'm in either Thursday if it's aggressive market, Friday if it's moderately aggressive, or Sunday because things have adjusted. But like Monday, what am I doing Monday? Well, Monday, New York, I'm probably on a Tuesday trade. So it's really funny. So like Monday occurs on Sunday or Friday to me. So what is Monday? Where does Monday exist? On Monday, I'm doing Tuesday. Right? Yes, Sky Killer. Yes, we record them, of course. Yes. Okay. So anyways, so that's that, guys. I think we talked through this enough because we talked about it Friday, Thursday. We talked about it all last week, so you know what's going on. NITO. Here's pound dollar. The previous discussion here was using PSAR as a place to manage your stop. So it's suggesting your stop loss is way down here under these market conditions. Okay. Even though it's going up, it's not a really good opportunity, but we can show you. So I'll insert your new tool here, price action pivot points. Okay. And you can see it's still bearish. So you might say, well, I was supposed to buy it here. And I'd say, well, no. If you're a bull, you're supposed to be buying higher highs and higher lows. So what it's saying is, yes, it's going up. So imagine you're on a 15-minute chart now, and all you're looking up is this. And you're like, it's up today, it's up today. So what? So what? So what? This is down, technically speaking. Okay? Now, this is exactly 2 standard deviations from the mean. So we know it's oversold. I would argue that that's not necessarily a reason to be buying, right? So now you have to incorporate this with your other tools and your thought process and your bias and stuff. So over time, if we start making higher highs and higher lows, which a bull would want, the slope of the mean, right, the M is equal the slope, and slope is equal to rise over run. Okay? So what you need is this to be a positive number. So to get that, you're going to need at least a touch here, then a higher low, then a higher high, then a higher low, and the equation will turn, it'll balance, right? So the first thing to all of this is what does M equal, right? Y equals MX plus B. So you got to figure out that. And so if you have a negative slope to the mean, well, you're probably in a bearish market. So you're like, well, I bought it low. Yeah, but you bought a lower low. So you can do it, but it's less ideal, right? But if you follow that up, okay, Okay, if you follow that up, it'll be different. And then, of course, the rest of the calculations are the standard deviation calculations. Okay, and that's also dynamic. So you're measuring here to here, and and then you're applying that over here and over there. And of course, that is changing each time it makes a new lower low and a higher high. The standard deviation changes, right? Which is what the I forget now, the square root of, what is it? Does anyone remember? Standard deviation is the square root of something else. I forget. But anyways, that's what the math is doing. So it'll tell you like, okay, you're a bull and you bought it. Great, good for you, but it might have been very silly. Because the statistics are telling you this is still bearish. Okay? And of course, the ultimate decision here is stand aside, step down. Stand down, soldier. Okay? Another way of looking at it is, you're shooting at rabbits taking this risk. Okay? You can make money. It's just not big money because you're betting against the trend. You're betting against what everyone else is doing. You might look at this and just say, well, I'm a bear and I'm going to make tons of money because everyone's selling this. That's probably the better attitude. Square root of the variance. Thank you. And so you have to calculate the variance, right? So, anyways, what you should be doing is looking for like opportunities that look like that. So you're not buying this, you're buying that, and you're buying that. Okay? You see what I mean? So this is a very quick way for you to just say, okay, over the last 3 days, let's say, is this a bullish market or a bearish market, right? And looking at it that way, oh, it's still bearish, statistically speaking. And then what technical tools should you use in that situation? Well, right, this is set up to be a bull, but we know the market conditions are not bullish. So what if you were a bear now? How does this impact your aggressiveness? Well, I can go to my indicators now and do my bias pivots and say, no, I'm a bear, not a bull. Okay, so now think of it again before I said it. If you were a bear, how does the how does the price action pivots impact your aggressiveness? If you're already a fundamental bear, you want this to go down. Well, you look at the market and it's saying, well, currently its price action is bearish. So you're like, oh, nice. But how do you set up your prices? Well, you're using your pivot points, your market pivot points now. And so when you combine that together, right, you see there's a sell, here's a sell, here's a sell, and tomorrow's sell. And you're like, oh my God. So under these market conditions, you're pretty confident in selling these areas. Meanwhile, some idiot keeps buying it low. Okay? Or is that true? It's not true because look, this is where bears were supposed to exit. This was where bears were supposed to exit. So a bear sold here, got out, and went up. Then a bear sold again, it came down. Okay? There's an opportunity here. And now you might say, well, we're on today's sell zone. No, we're on tomorrow's sell zone. So again, going back to what I said earlier, on Monday, I'm not trading Monday, I'm trading Tuesday. So here we are on Monday. This is Tuesday's bearish trade. So if you sold this, you're going for Tuesday's target, not Monday. Monday's already done. Dude, we've wrapped up Monday already. Where were you? Okay. Monday's done and dusted. The money's already in the bank, right? Spent on the debit card to fill the tank on the Lambo. You got yourself some 100 octane for the Lambo. Okay? What should you do? Spam chat says, what should I do if I'm up points? What was your plan, son? It's a beautiful thing about a plan. You know what you're going to do before you do it. So if you're asking, what should I do? How the hell would I know? What was your intent? Why did you do it? What analysis did you put into it? To me, a trade is a trade is a trade is a trade. I've seen millions of trades. Honestly, they're all irrelevant. The only interesting part of a trade is not whether you made money or lost money. It's more the reasoning behind it. What was your alpha? Explain to me your thought process. Oh, I didn't have a thought process. Well, then your trade's boring. Right? You know what I mean? So I can't help you make that decision. You should talk to your priest. WTI, my oh my, WTI. So we just did this on whatever pair. This is a bullish price. Oh no, sorry, actually that's not really a bullish price. So if I were me, I would still, well, how about this? Not even me. Statistically speaking, WTI is still bearish. Now, the odd part of this is I would sell it up here. But we do have a little bit here, but it's out of position. So that means you're probably going to have to use a 4-hour. So we go to the 4-hour. And yeah, you may have actually already missed it, right? You're trying to catch this 4-hour, right? Okay. So you might have actually already missed it. Too slow. Too slow, bro. Too slow. If not, maybe up in here, okay? So 37 to 37.50. Okay. Still. So if it's a monthly M2, does that mean you buy it? No. What does it mean? Gold. Oh, gee. I didn't mean to be insulting, but it's a silly question to ask me. I don't know where you should get out. But, okay, so let's talk about this. Someone says this is a monthly M2. Okay, what does that have to do with anything if it's a downtrend? Manuel says, if the markets go smoothly, we expect the markets to calm down by Wednesday? Absolutely not. Okay. So remember, guys, don't buy something because some tool told you. You never buy a pivot point because it's a pivot point. Okay? So you're like, Wayne, this is a monthly buy pivot. Well, so what? It's bearish. Why would I buy a monthly pivot in a bearish market? So you have to have more than that. So if you have a fundamental reason to be bullish and you're at the price, you still need, okay, you need price action and really a change in direction. So one way to say that, statistically, let's say, is you've identified, let's say, 33.65 as support, okay? And you're a bull, so you want this to go up. Okay, get off the 4-hour, go on a 15-minute chart, add now, insert indicators, custom, price action. So you got your market support, but what about your price support? Okay. And now, okay, I want to go a little farther than that. Okay, there we go. Because we have to, not only do we need a respect of the bottom, but we're going to need a higher high or something, right? So now in this time frame, what we need is this. And since you're on a monthly pivot, you could have a whole week you could wait a whole week. Okay? Now, if the market was already bullish and we're at monthly M2, you just buy fire for effect. But, you're on the wrong side of the glass. You're right, you're the beluga, not the tourist. So, You got to wait your turn. Baby beluga. I mean, like on this time frame that I'm measuring here, it's way bearish out of position. It's way bearish out of position. So that tells us something. Okay? OOP is very, very specific, out of position. So we know exactly how to handle this. Okay? We know what the target is. We know how quickly we're going to get to the target. So we have an assumption of velocity, not just price. And then we also know our entry. Okay? And it may have already occurred, or it's going to be the next candle. Okay? What am I looking for? Oh, there it is. Oh, this isn't set right. Why is this not set right? I forget what the settings are. What do I see? Zero lag, moving average period 21. Shift. So this is clearly not right. I don't remember what these are. I'd have to play with them again. Yeah, it just didn't work. No, it's not even drawing at all anymore. What did I do to it? Boo, boo, doo, boo, 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 boo. Really got to make this stand out. So let's make it. Where's Dodger Blue? Cornflower, Royal Blue, Blue, Deep Sky Blue. There used to be a Dodger Blue somewhere. We'll just make it Royal Blue. All right, so that's not correct. So I don't remember the settings now. What happens here? Okay, that's better. Okay, so this is a tool on the MetaTrader's platform for download. Now I think it's probably in the complete toolkit, but what I'm trying to do here. So let me change the color. What I'm trying to do with this tool is say there's a problem with the scenario of OOP. Anyone that's gone through the swing trading course knows to kick it off the 4-hour 21. The problem is that the 4-hour 21 is a moving target. So you have to shoot in front of the target. Okay? And you get into a scenario like I was just saying, like I said, oh, you might have already missed it. You're like, what do you mean already missed it? What do you mean I already missed it? We haven't touched the 21. Well, if it dropped and made a lower low, this is going to move right and down. So tomorrow you'll log in and you'll say, why didn't I sell it off the 21? Because it's going to be right here. So this tool it's taking the lag out of the moving average. You see what I mean? So this is the 4-hour 21. This is the 4-hour 21 we normally use. This is the one with the lag. This is with the lag removed. And what it's doing is it's projecting based on the old numbers. It's projecting a little bit. So there's a little bit of linear regression here. It's trying to calculate the shorter term, the average of the mean or the relative change of the mean. Right? So again, you're looking at M equals slope, rise over run. So it's doing a little bit of that in here on top of the regular exponential moving average. So again, this is your typical EMA. The benefit of it adjusts faster than a simple moving average. And the benefit of this tool on the MetaTrader platform, on metatraders.com, is that it's doing this, but it's tweaking it also to remove the lag, because all moving averages lag, because to create this, you're looking at the average of the last 21 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. What's the average price? There it is. Okay? But it's so backward looking, right, that if things had changed, it would take a while because it's still looking backwards. So how can you remove the lag? And that's what this other tool is trying to do, to say, okay, you're interested in the 4-hour 21. I got you on that, right? But look, there is a difference, isn't there? The thinner line is the normal EMA, and this updates faster. So now I've been trading a long time, so I can log in and say, well, you missed it. Meaning the 21 EMA might be up here, and you're told, well, in this scenario, this is clearly an OOP. So you absolutely know what to do. You need to sell the 4-hour 21. 4 hours 21 is here, and you wait for it to touch, and it never touches, never touches, never touches, never touches, and that's why you don't sell it. And then you come back the next day, and this moved from here to here. And you'll say, dang it, I missed it again. How come I always miss those OOPs? Well, because you're waiting to stare at it like this, but moving averages never work that way. If it's touching the EMA, you're probably already late, because it hasn't even counted this candle yet. It's not closed. That's neat though, right? To me, it's like training wheels. Like, you should know how to do that, but look, if you haven't had the experience, then you don't know how to do it. So it's a guide. They're both 21 EMAs. One's trying to predict the future, and the other one is explaining the past. Well, it's not just a smooth moving average, okay? It's projecting. It has to know, okay? It has to know, like, again, really what's happening is you're taking this, which is a trend, but it's also changing with the average, so you know the rise over run is negative. So not only is it moving right, but it's moving down, okay? And from that, you can say, oh, okay, we're here now, but based on the slope, okay, again, statistics, guys, based on the slope, where will we be in, let's say, 5 periods? And what it's saying is, well, in 5 periods, we will be down here. So then the math says, well, then plot that now. What? Because remember, I changed it, right? Where will we be in 5 candles based on the 21? Project the 21 out into the future so I can trade it now. Did anyone just like fall out of their chair? You're like, oh my God, now I get it. I'm not interested in the 21 now. I'm interested where will the 21 EMA be in 20 hours from now. And I will sell that now. I will sell tomorrow's 21, but I'll do it today. Versus looking backwards. Did anyone have an aha moment? Was that helpful to anyone? Whatever you're doing today should be tomorrow. Yeah. That indicator is a zero lag moving average. It's part of the MetaTrader's toolkit. I believe it's in the complete toolkit, so it costs more than $5, but you get all these like all these, right? Like automatic trend lines and stuff like that. Nope, they're not drawing. That's interesting. What did I do to my PC? Okay, so like I look at this and I can clearly see it's still bearish. Now I like to have why can't I see the ask? Only looks like a bid. Oh, no wonder. Well, oh, that is the ask. Oh, I see what it's doing. That's weird. That should be different. Well, let's make that red. Or even white. Let's make that white. And then where's the bid? What, I can't change the bid? So the bid's black, that's why we can't see it. Bull candle. I mean, suppose I could just get rid of it altogether. It's probably best. Just get rid of it. Yeah. So I look at that and say, well, that's clearly bearish, right? Now, on a 1 minute, it's not clearly bearish. On a 5 minute, it's turning, right? It's turning. So this is where, like other tools, like pivot points are important, because if this area here is important to you based on technical analysis, and it's important to you based on technical analysis because fundamentally you're looking for the support. And that's all where the money is. So now the next step would be, you know, at what point are you buying into this, right? Oh, yeah, bid and grid. Yeah, you're right. Okay. So I like this template. A lot of people don't like the template. I do. So it's one of those things. I like it. A lot of people don't like it. But again, it's part of the complete toolkit at metatraders.com. So if you like it, you use it. If you don't like it, you don't use it, right? Here's the trading sessions. Currently, we're in the overlap between London and New York. Okay. So one of the things in the day trading course, we talk about the importance of timing. And you're like, this often is an important time for the rest of the day. This is often an important time for the rest of the day. This is often an important time for the rest of the day. Okay? In particular, the overlap of the overlap. So now we got over there and say, this is pre-London. This is pre-London. This is pre-London. Okay? And this is pre-London. And at that moment, it was down the whole day. And then nothing happened until the new day, and then it was down all day. And then there's a little fizzle, and then nothing happened. Okay, now, if you started here and you were a bear, you're like, oh, I don't like it, so you'd have to create a double top. And anyways, okay? And if you're a bear, would you sell this? No. Just like this. On this day, if you were a bear, would you sell this? No. Okay? But you'd sell that. If you were a bear, would you sell this? No. Okay? So today, not very good for selling in those conditions, but you might have tomorrow like this. Okay? So if you were a bear, would you sell this? Yeah. If you were a bear, would you sell this? Yeah. If you were a bear, would you sell this? No. Okay. So this is breaking your day down into digestible pieces. Okay. Okay. What do you think? It's pretty snazzy, right? Very good tools if you're, so like, if you know me, most of my trading is in this period because to me, a day trade, a swing trade, a position trade, it's all the same trade. The plan is different, but the technique is the same. See ya, Joe Moo. Jean-Guy says, what if you just want the indicator? Yeah, you have to buy everything. Yeah, can you just install the one? Yes. So the way it looks is when you log in, you have like an indicator, a template, and you can download each one individually. But on top of it, there's a auto installer. And you can run that and it just installs everything. But there are videos to show you how to install individual ones. So you're like, well, I want to install a template, or I want to install an indicator, or I want to install an EA. You just follow, right? You have to open up the right folder, and there's videos on that, and say, well, this is, what is it called? MQ4. You open the MQ folder, and you're like, okay, I'll download this one. Great. And then I put it in here. The challenge with a lot of this is, to be honest, some people just don't know how to download. And then other people they can't figure out, even though there's a video, they can't figure out how to click on file and open, right? And there's all these challenges. Like there's just different levels where they're like, I can't put an indicator file into an indicator folder, or I don't know how to unzip something. I mean, like a lot of people have these tools and there's different challenges. I'm not saying it's bad. Just say a lot of people don't know how to do that. So I just programmed an auto installer and just install everything. But yeah, Jean-Guy, if you just want to like download this one, by all means, download it, put it in the right folder. If you don't know what the right folder is, there's a video to show you. And I know you can do it. Do I keep saying Jean-Guy? Sorry, I know it's Guy. Sorry, there's Jean-Guy and Guy. Sorry. I just realized I think I've been saying Jean-Guy. Sorry. Okay, Guy? Walt. So anyways, I apologize. Oh, we didn't even go through the calendar. You know what? You should already know. I mean, come on. I know. Oh, wow, look at the lag. That's funny. The lag. I already apologized. So now you're hearing me apologize, but you're going to hear me apologizing for the apologize. So anyways. Terrible. Yeah. So I know who Jean-Guy is. I know who Guy is. Sorry. It's one of these things I'm staring at my chart and think I can't multitask. Yeah. But yeah. Okay. Yeah, I don't want to go through the calendar. You should already know. Why don't you download the Aussie stuff, the yen stuff, the Bank of England stuff, the Fed stuff. I mean, you guys, I'm sorry, I'm tired. You should know all this stuff already. There's a lot of stuff going on this week on top of the political election. There's an opportunity to go to the Reserve Bank of Australian website and download information. You can go to the Bank of Japan this week and download their new stuff. The Bank of England, go to their website later this week and download their new information. Go to the Fed and download their stuff. I mean, come on. It's Monday morning in New York. And wherever you are, it might be Monday evening or afternoon or something. And I shouldn't have to go through the calendar for the week. Usually I do, but like I did that yesterday and I did that last week, like for myself too. Like you should know what's on the calendar this week, and you should know the 4 or 5 different central bank reports that are coming out this week that you should download, print out, highlight, and read. You should, right? Like it's so late in the day now for me to just be telling you. Yeah. I mean, it should, right? Like, but I'll give you the link to the calendar I like. It's called Forex.Today. And you click on calendar. Okay, and it's all there. I mean, God dang it. So now I'm here. Now I kind of have to do it. All right, so I'll do this again. Sorry, maybe I'm just cranky or tired or something. But I've looked at this calendar multiple times already this week and last week. So one of the cool things is you can always look next week. Isn't that cool? So like, why would on Monday you would just be looking at this? Well, you should have done this last week, right? So anyway, so here we are this week. And look, RBA statement, download that. Bank of Japan media minutes, download that. ADP, whatever, fine. Bank of England, download their minutes and their policy statement, download that. FOMC later that day, right? Download their statement and read that, okay? RBA monetary policy statement, download and read that. And then on Friday, non-farm payrolls in the United States, but also in Canada, okay? And then, of course, the awesome trade balance out of China. So there it is. There's the whole week. We got the political election, but we got the RBA interest rate decision. We got the Bank of Japan meeting minutes. We got none of that is actually that important. Going out on Thursday, the Bank of England stuff, the Fed stuff, the RBA stuff, and then wrapping it up with non-farm payrolls and jobs report out of Canada. That's a big ass week, plus the political election. So don't just think political election. There's a lot going on, and there's at least 4, probably more like 5 things you actually need to download, print out, read, and highlight if you're meeting my minimal acceptable expectations. Howard, sorry, I didn't do last week. There was a hurricane in Atlanta. It literally went straight over my house. So I didn't do one last week. Plus, it's kind of hard to plan for, because of the election, there wasn't really much of a swing to do. Now there's the monthly swing, but I wasn't sure about the weekly swing. So I sent out an email about that. But instead, Howard, we're meeting tomorrow night at 7 p.m. in the war room. So instead of doing last Thursday's swing, I decided on election night we'll get together as a crew and we'll do the election together. So again, go to, if you're watching this video and you want to trade the election with me, I'm starting at 7. We'll go until it makes sense. And all you have to do is go to fxbootcamp.com, pay some money for the video training courses. Then it's going to upsell you. It's going to say, hey, do you want to join the live swing trading group? We meet once a week. Experienced traders, new traders, all alike. And we meet and do group work together. Do you want to join that? So you join that. Okay? And that war room will be open. And we'll hang. Okay? Yen pairs. I thought I did yen pairs. I think I started with yen pairs, JK. Let me double check. Yeah, I did all these. You can see I changed that, and I changed that, and I changed that. Yeah, so I did them all. Okay. I started with this one. So yeah, it's right at the beginning of the webinar. So watch the recording. Okay. Wayne, please, how do I pay for your chart buy sell zone chart? Metatraders.com. The link is in the description below. So if you want my charts, the link is in the description below. If you want my broker, the link is in the description below. If you want my training courses and live trading group, the link is in the description below. If you want my book, the link is in the description below. If you like the music I play before I actually start the webinar, as sort of people gather around, the link is in the description below. Wink, wink, nudge, nudge. So while you're giving me a thumbs up or subscribing in the area below the video, you can look at all the resources that have been made available to you. And by the way, by the demand of the market, not me pushing out crap. Okay? Been doing this for 20 years, so it's people asking. So I got that you're a customer. I'm gonna take a look at the database and see what's up, and I'm gonna run a new thing. But you should get it if you have an active membership. You should get it. Okay? Now, if you're not in my group and you're in Ryan's group, then just log in as you normally would to the war room. Okay? You probably don't get a reminder email, but you'll just, write it down. Okay? But if you're an active member of my group, you'll get an email. So I'm going to compile the database and make a new one just to make sure everything is up to speed, right? So thank you for being on my team. Thank you for being good looking and honest and curious and being hardworking. Thank you for your ridiculous, sickening work ethic. All that kind of stuff. Thank you very much. I like working with you. You're good people. Okay? So thank you for investing your time today with me. I hope it was worth your investment. So I will see you tomorrow, and the market will probably be hypersensitive already. And then maybe I'll see you tomorrow night if you're in my crew. Also, I am making progress with the book club. The programmers decided to come back and ask for 700% more money. Well, the interesting thing is it's only money, right? So I'll have to make a decision. So peace on earth. May the pips be with you. May your profits be above average.